Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Monday, the 17th of June, 2024, 5:55 p.m. Central Time. Now, before we get into my comments and all, one thing that you should understand, your Father's Day flash sale ends tomorrow, and it will not go all day long tomorrow, so you're in the final hours of it. If you would like to get half off our introductory price on our futures video, our spider video, and or the combo package, all you need to do, go to irepstein.com or click up here. When you go to irepstein.com, it's under research. You don't need a discount code. It will go through automatically. Hope you take advantage of it. Now, before we get too far in pricing, tomorrow we get advanced retail sales for May. That comes out at 7:30 in the morning. We get Redbook Group. They'll update their U.S. retail sales at 7:55. The Federal Reserve will release monthly industrial production and capacity utilization at 8:15. That generally gets a bit of attention from the market. April business inventories come out at 9. We get a host of Fed members. We had several speaking today as well. And we get the API numbers coming out at 3:30. Then remember, on Wednesday, there aren't many reports. And that's because of Juneteenth. The futures markets will have abbreviated hours, and then everything turns back to normal on Thursday. The stock markets are closed on Juneteenth. So keep that all in the back of your mind as to what goes on. Cash markets, bonds, and notes will also be closed on that specific day. Okay? All right. I believe they are at least. So let's take a look at what we've got. I'll start with the energies, which got a little bit of a boost today. We're up to $84. You heard me, 84. So we're gaining on the market. You're approaching right now the May highs. So that's good action in the market. Bonds and notes fairly flat, but you added some yield back into the 427, 427 to 430 area in the 10-year notes. Metal markets were down again, but they're getting a bounce tonight. Copper especially down today, and one of the reasons is, once again, the housing market in China just not doing well. And this plan that they've come up with, well, if you look at home values, if you look at the amount of sales, it's like this. So they're probably going to have to do more in China to get this going. In the U.S., I was looking at Linn's earnings and their forward guidance, and that's the problem. Their numbers were good, but the guidance isn't great. And again, people are, even though rates are falling a little bit, home prices are still relatively high, and it depends which part of that housing part you're at. Are you the high-end homes where you're getting a whole different client than you are the medium to the lower end? And that becomes the problem in the market. As you can see, the currency markets, well, you're trying to be stable right now. The dollar was down. First thing this morning when I saw both the dollar and the euro up, I said to you, it won't stay that way. One of them's got to give, and it's exactly what occurred. All right. So as we take a look at the gold market, the bigger question is the market going to head down to the 18-week moving average, or is this getting low enough where at any point here in this last $40, $50 or so, the market doesn't reach all the way down? That is the question I think you're going to have to ask. Obviously, if you crack through these levels to 2,300, I think you can get down to that moving average I just showed. Trend down, or is it? Not really. While you've got the pattern of lower highs, you suddenly have higher lows. So I see a market that is starting to come in here. The market battleground is pretty evident to me. It's the 18-day average at 2351. Moving averages below the market, far away at this point. So the major support's probably going to be 2310. And that's why I'm looking at that weekly chart and saying to myself, I don't think you're going down to that number. I think that at the worst, you're probably going to find some support at the lower Bollinger Band. And I say that because you have already an oversold market. You'd have to get some terrible piece of news to be able to drive the market back under that band down there. So I think you're coming to the end of this break. That is the point that I'm trying to make. In the gold-silver ratio, we've had one heck of a correction, and now the market at 78, coming from the roughly to 73 level, you've added where you needed 5 more ounces of silver. And I think you'll agree with me. I said the market would probably come up here and then fight a battle. It did, and then once you made the higher high here, you continued on. So now the question is, does the market drop back down to 77.63? Until it gets under that, again, silver losing to the gold market. When we take a look at silver on the chart here, you can see how the market's just dropping away here, oversold. If it wants to get a final washout, it doesn't have to because you had a pretty good one through here, 28.38 could be the number. In order to break the downtrend, all you have to do is take out 29.68 and you'd suddenly have a pattern of higher lows and a higher high, assuming you get over that, and then you could make a run to the 30-31 level, the 18. So I'm thinking the metal markets, not ready to put my, how do I put it, the nail in the coffin, but I am saying that I think you've run far enough down here where the market's attempting the first steps of trying to find itself some floor. In the copper market, will you get to the lower Bollinger Band? Now, I did think, and if you saw me over the weekend, I was talking maybe you can get to the 437 level. 440 is now the break low, so I'm not too far from it. And I don't know that you have to get there. You're still embedded. You'll know you're not getting there if you don't hit it, and the red line here closes over 21. Then the odds are you're going to go back up and make a challenge of the 18-day average of closes. And the work that we do is pretty good here in the sense that as we fell into the 100-day, the 200, and the Bollinger Band, I thought the market would find support, and that would be a big short covering area. That's what I was telling traders in my morning subscriber videos. And now you're flirting with losing the embedded reading. If it's lost, I can make an argument the price and the 18-day average will try to come together again. Last, in the dollar, you're fighting a big battle at the upper Bollinger Band. It's hard to get through that and break away when you have this wide of a trading band between the black line here and this one. The narrower it gets, the easier it is. The wider it gets, the harder it is. The trend is certainly still up, but your overbought can be into that number. That's where I think the pros took their money off the table or are taking their money off the table. I think they'll put that all together and try to work with that. So again, I'm going to remind you, your last full session right now coming up where you can get the Father's Day special, because this will be over sometime tomorrow. The computers just take it off. And in order to get that done, go to iraepstein.com, as you can see right here under the word research, or move your cursor to the top here and it'll take you into that area. If you see the icon and you give that a click, and these are the prices that you get, 30 days worth of that. It's a great way for less than the price of coffee. Think about that. I mean, if you're in New York, Chicago, you can't get coffees, a latte or anything for those prices, yet you're going to get 22 days of videos. I think you'll find it worth your time and effort. And I'm doing another special report this week. So once I get that done, I may do it tomorrow, that's included, whereas other people, to get it after they've gone through their couple of free attempts to see it, they pay $3.50 a piece. So you're getting that included in this. Good time to make that decision. I'm Ira. You have yourself a great evening. I will speak to you first thing in the morning.